The most important thing when it comes to figuring out if it's going to be a liquidity sweep or a liquidity run is your trend. You want to make sure you know the existing market trend. That is, whether the market structure is bullish or bearish. A very basic rule of thumb is that if it is an uptrend structure with higher swing highs and lows, and if we are looking at a swing high, then most probably we can expect a liquidity run of prices above the swing high and not really a liquidity sweep. That is, there are high chances that the price will continue higher. But if it's a bull trend and you're focusing on a swing low, then most probably you can expect a stop hunt or a liquidity sweep below this low, and there are good chances that the prices will reverse direction and move higher. Now you can ask me, on what basis am I talking about this? Now the logic behind this assumption is simple. It is based on the concept of strong and weak highs and lows. Essentially, during a bullish market structure, the higher swing lows are considered as strong lows because price respect these swing lows on multiple occasions without breaking and closing below these lows. A higher low becomes a weak low only when the market changes character towards bearishness. Until and unless this market structure shift happens, price will respect or protect these higher lows. Sometimes price might sweep below these lows, and on other occasions price won't even pull back deep enough to test these lows. And even if the market does completely change character, a lot of the time price will pop back inside the range for a pullback. Now on the other hand, a higher swing high during a bull trend is considered as a weak high because most of the time the market will break through these highs to grab the buy side liquidity, thereby forming a break of structure. The only occasion where a higher high becomes a strong high is when price fails to break and close above the swing high, thereby not forming a valid bullish break of structure. Of course, prices could sweep through the high, but if the market fails to form a valid bullish structure break, then also the high is considered as a strong one. This could potentially be the beginning of a change of character or a shift in the market sentiment. Now, this will give you a basic framework to identify if you should expect a liquidity sweep or a run.